So you clicked on this video because you are wanting to become a full-time Forex trader. And obviously, to become a trader, you need to have money to trade. You need to have capital in your trading account to make any money. The same with anything in the finance or business world, you need money to start. So how much capital do you need to become a full-time trader? And I'm going to go through how much money you need to start trading, how much money you need to become a part-time trader, a full-time trader, and also to get rich from trading, because there's a big difference between a part-time trader, a full-time trader, and actually becoming rich from trading. So I'm going to cover every single phase, and I have actually been through every single phase. I started out trading when I was 16 years old. I then progressed into trading whilst I was at college, so a part-time trader. I then dropped out of college to commit full-time to trading, and then I would say that I am a fairly well-off trader. You know, I can afford to live comfortably, I can afford to buy nice things, I can go anywhere in the world. So I'm going to take you through every single step. I just want to say before we go into the points, if you're putting any money into a Forex account, or any investment for that matter, it needs to be money that you can live comfortably without. So money that you are 100% okay with losing. Because as we know, there's always a risk that you do lose money when you put it into an account. You could lose money in the next trade, you could lose money over the next 6 months. You just don't know. So when you are starting out, you're not going to be making tons of money anyway. During this phase, you're mainly just learning. So that is why you don't want to be putting tens of thousands of pounds into a Forex account, because the likelihood of that going to zero is very, very high. As we know from the stats that brokers like to publish, 90% of traders lose 90% of their money in the first 90 days of learning to trade or actively trading. But if you are watching on this channel, your expectations are probably at a decent level by now. If you've seen other videos, I often preach that you shouldn't try to get rich from trading, and you definitely won't get rich quick. So if this is something that you are trying to do, then just quit. It's as simple as that, because you will never get rich quick from trading. So during this phase, you're kind of just learning the basics of trading. You're developing your strategy. You're getting comfortable with risk management, how to journal your trades, how to go through the process of dealing with drawdown. So how are you going to do this effectively without having decent capital in your account? Well, the simple way to do this is by starting small. You can't just jump straight into the deep end of trading. You can't just put all your capital into an account and just hope it works. That's not going to happen. So the best thing you can do at the start is maybe put in 250 to 500 pounds into an account. The reason I'm saying 250 to 500 and not 100 or 50 pounds into an account is because you can't properly manage a 100 pound account. People often say online, you can't manage £100, you can't manage £10,000, and if you can't do that, you can't manage £100,000. And this is true, but you can't risk manage on £100. Let's say you're trading GBP USD, for example, with the smallest lot size possible at 0.01, a 30 pip stop loss, and you're losing, £2-3. Are you going to be comfortable losing, 2-3% per trade, depending on where your stop loss is? Probably not. And then obviously you'll be in the mindset of, okay, every single loss I take is 3%. So then when you scale up your capital, you'll then be still risking that 3% per trade. And if you get to $1 million in capital, risking 30 grand per trade is quite high. So you're kind of getting the wrong habits right from the start. Whereas let's say you're trading with £500, to some people that is a large amount, but I feel like if you are getting into trading where money makes money, if you don't have £500 to invest into yourself as a trader and learning how to trade in the first place, then you won't make money or substantial amounts of money long term from trading anyway. So £500, you can risk manage, you can risk £5 per trade, for example, £5 to £10 per trade, and you can quite easily grow this account. The way I would do it if I was starting with £500 in my account, again, from scratch now, I'd learn the basics. I'd learn on a demo account just for the basics. People often say to learn on a demo, but I feel like you should be trading live money as soon as possible, because if there's no real money on the line, you don't care what happens. You can take any trade. You don't have any emotional attachment to that money because you haven't had to work hours to get that £500 if it's just £500 of demo money. So I would learn the basics on the demo, and then I would go in with that £500 and basically just trade it and just see what happens. I'll journal every single trade, and I'll just try and make profits and consistent profits. Let's say I get the account to maybe £750. I then made £250. I would then use this to invest it into a prop firm challenge. This prop firm challenge will then give me access to higher capital, which then means if I get a payout from that prop firm, I can then fund my personal account with that profit, and that £500 can quite quickly grow to a larger amount. But I would only do that if you've made profits from live trading in the first place. Don't go straight into prop firms. Don't go straight into large capital on a personal account. Start small and work your way up. But don't start too small and don't start too large. You kind of have to see how much you can afford and maybe save a little bit first so that you're comfortable outside of trading. So if this money does go, that you are still comfortable in your life. So we're going to go onto the part-time trader. This is for someone that either has a full-time job and trading is completely on the side. So maybe they enter positions in the evening or in the morning before they go to work, depending obviously on their shift hours. Or you could be a part-time trader and a part-time worker. So you have 5 hours a day, let's say for example, working a job, then the rest of the time you have allocated towards your trading. And the best way to actually go about this is to have all your expenses paid by your job. So you're obviously going to be working part-time or full-time in a job. So you need to live below your means. I often say everybody should live below their means, no matter how much money they're making. You know, I've had big trading days, $30, $40, $50,000 in a day. A lot of people then start spending all that money. They go for the biggest penthouse. They go for the best location in the world. But you have to realize that in trading, there's going to be good months and there's also going to be bad months. And when I say bad months, they can come 3, 4, 5 months at a time. So you have to be financially stable enough to deal with multiple losing months in a row. So if you have your job that is consistent, guaranteed income, obviously guaranteed to a certain extent, you obviously will have a notice period. If you do unfortunately lose that job, it's somewhat guaranteed, more than trading is anyway. So let's say your expenses are £1,500 per month and your job pays you £2,000 per month, after tax. You're then left with £500 a month and your expenses and everything is already paid for. So you have no stress brought over into your trading to make profits. You don't need to make profits, but it is also good if you do make profits. But how much do you really need to become a part-time trader? And if you are not taking money out of your account, it also helps because this will allow the compound effect to grow your account massively. So let's say you're making an average of 3% per month. I feel like that's a decent amount. If you're making 2 to 5% per month as a trader consistently or an average, I feel like you're doing very, very well. People often push for higher amounts, but I feel like it's better to have consistently low returns or any returns that are consistent rather than an outlandish month and then a massive losing month, then, up and down like a yo-yo. You don't want that. You want slow, consistent gains. And let's say you are trading with £25,000 in capital. Then you'll be making an extra £750 per month. Obviously, it's hard to get to that point where you have £25,000 to trade with. But if you are trading part-time, trading with £25,000 will only give you an extra £750 per month. And this is on average. We're averaging 3% for the year. So obviously that is a very, very good return if you're thinking 36% profit in a year. And obviously on that £25,000, if that compounds over the year, you're making a very, very decent return. And this adds up to an extra £9,000 per year. So let's say your main job, you get £2,000 per month, which is £24,000 in a year. And then this secondary part-time side hustle you're doing of trading gives you an extra £9,000. You're then making over £30,000 just from those two combined. Obviously, this doesn't mean you're making so much money from trading. Doesn't mean your overall income isn't massive. £30,000 isn't a massive income, but it's £9,000 you didn't have before. So if you're doing something part-time and it obviously isn't taking up a full day, isn't taking up 40 hours a week, and you're making an extra £9,000, that'd be great. Obviously, you can go to £50,000, £100,000. And the beauty of trading is that it's very scalable. The same trades you take on £25,000 will be the same trades you take on £250,000. The same amount of work is involved, but you're making 10 times the amount of profit. So to make more profit, you don't need more time. You have to put in more work. You just need more capital. It's as simple as that. And everyone watching this video can put that into a compound interest calculator and see how much your £25,000 will be worth in 5 years or 10 years. But obviously this doesn't take into account inflation, taxes, losing months, losing years. That can happen. You see some of the best hedge funds in the world sometimes have losing years, and these are guys with 50 screens, they have 200 employees, and they still lose money. So if you think you're sat in your office or in your bedroom trading, trying to beat the markets, if you're making 10-20% per year, you're doing very, very well. And if you have £25,000, you're going to make some nice profits. And then next, we're moving on to full-time trader. So perhaps you're looking to quit your job, or you are already a full-time trader watching this and you want to know how much money you should need to trade at that level. Then I'm going to tell you. It would be quite easy to see just based off your expenses, but I feel like when you are trading full-time, there's a lot of added pressure. So you need to have emergency funds in place before you even go full-time in the first place. So let's say your expenses per year are around £25,000. Let's just use 25,000 as an example. You obviously need in trading capital, if your average year, for example, is 20%. So you need to make sure that that 20% of profit will be a lot larger than that £25,000. So you're going to need an account in the multi-six-figure range. But how can we make it a little bit easier? So let's say you're making an average of 5% per month at this level. You're trading full time, you're making 5% per month. Obviously, these are incredible returns. If you're able to make 5% per month over the next few years, you're doing very, very well in the markets. And you're looking to earn the average salary in the UK, you'll be needing an account of around £80,000 just to earn the average salary in the UK. But you're going to have periods where it's tough. Maybe you have 3 months where you don't have any profits and you're just losing, so you can't take money out of that account to pay your expenses. So I would always suggest an emergency fund of 6 to 12 months. Obviously, if there's more than 12 months that you have liquid that you can pay for your expenses, then that is going to be better because it relieves a lot of stress from your trading. Having to make money every single month, every single week can be very difficult, especially if you're not experienced with having that high level of stress and importance behind making profits. So if you're looking to make it a little bit easier, you can obviously trade with prop firms. Prop firms offer you multi-six-figure accounts for a fraction of the price of trading with personal capital of multi-six figures. If you want to trade with a £250,000 account personally, you need to have £250,000. But if you want to do it for a prop firm, you probably need around £500-600. And obviously there are positives and negatives to trading with prop firms that I've discussed previously. One positive is that you can access large capital and you get very, very generous profit splits. But some of the negatives could be you don't have access to the capital. They pay you when they want to pay you. They can delay your payout. They can reject your payout. You have no say. Whereas if you have £250,000 in personal capital, you have full control over that. If you want to take that money out and put it into your bank next week, you can do so. So you're fully protected at that point. So that should be your main focus. But your main goal as someone who is trading full time is to not rely on these prop firms. You should be looking to rely on your own money or private capital, so investor capital. But if you have anywhere between 80, 100,000, 200,000 pounds in personal capital, then you can quite easily make the average wage in the UK or relatively higher dependent on your returns. But it's always best to have additional income to cover your expenses, whether this is savings accounts or investment accounts that cover all your expenses. This would be the ideal situation, and it kind of frees up your mind when you are trading. So moving on to the final step, which is the rich trader, the one that can buy Rolexes, the one that can buy Lamborghinis, the one that can private jet all around the world. How do you get to this level? Well, it's quite simple. You just need more capital. And how do you get that capital? Again, you could use prop firms. I've had extremely large profit splits from prop firms, loads of profit splits in the 15 to 25,000 pound range. And if you're doing 2 of those, 2, 3, 4 of those per year, you're making 6 figures a year just from prop firms. And if you're funneling those profits into your personal account and growing that alongside too, and at this point you're already a full-time trader, you can make a very, very decent return, in the 6 figures just from profits. But if you want to get to the proper level, you need multi 7-figure, if not 8-figure. So the slowest way to do this, and probably the easiest way, is to just compound long term. Put money in, get slow returns, but consistent returns. If you're making 20% per year, it will grow very, very quickly. But it's not going to happen overnight. It's not as quick as in 6 months I can make £1 million a year. It's not going to be that quick. If you have a few £100,000, you're consistently growing that money, you can definitely become rich just from that. And this will also help you build a track record to then bring in outside capital. So capital from high net worth individuals or family offices, people that like to invest money. And you'd kind of act as, a sort of hedge fund or just a trader that manages other people's money. But as you can probably imagine, they want to see proof of profitability, which is why a track record is essential if you're looking to do this. And the last way to do this is to get max allocation with prop firms. Many prop firms now are kind of going into the proprietary trading route, and not proprietary retail, I mean institutional. So they'll give you a salary, you get a certain amount of capital to trade, and you can scale up to 7 figures. So that is definitely a route to take, but you have to pick very, very wisely. If you're picking a prop firm, be very specific. You're going to want to know every single rule. You're going to want to know what you can and can't do, the reputation of the prop firm, reviews, previous clients. You have to be very selective if you're going to go for max allocation and spend thousands of pounds on challenges. Because obviously to get a large allocation, you're going to need to buy all the challenges available. But as we know, there are probably hundreds of prop firms out there now. So if you pick wisely, you can quite easily get a few million in funding. Obviously, it's quite challenging to pass all the challenges. But if you are a very, very good trader and that is the way you want to go, then you can definitely do quite well. And majority of the time, these traders that are doing really well, making loads of money, they'll reinvest their profits back into their account. If they're making 100k a year, 200k a year from prop firms, they'll reinvest that into their personal accounts or into their funds. Because they know they're good traders, they can beat the S&P 500, they can beat government bonds, they can beat the average stock investment. And if they're going to do that consistently, their accounts will grow to massive amounts. But obviously you don't want all of your money in a trading account. Firstly, in the UK, you're only covered up to, I think it's £85,000. So anything over that, anything happens, you're not protected. Obviously the likelihood of an FCA regulated broker going down is quite slim, but it could happen. And it probably has happened in the past. So having other money, whether it's in property, index funds, crypto, individual stocks, or pretty much any other investment, it's always good to diversify. But if you really want to make money from something, you have to go fairly all in. I'm not saying go all in on trading, because if you have £1 million to trade with, it's not ideal to go and put all that £1 million in one account. It's not the best thing to do. But I'm not a financial advisor, so you can do anything with your money. And if you have any experiences with trading part-time, full-time, or being a rich trader, comment them down below for the viewers to read.